Good morning, hello and welcome to Opening Bell. You're with us on Moneycontrol. I'm Surabhi Upadhyay. It's a Wednesday morning and markets are still very much keeping their focus on the developments in West Asia, on the war that is still raging. But more importantly, it's comments than actual on-ground action that seems to be driving markets. And we've had plenty of commentary and plenty of flip-flops last night. A promise being made, or actually a statement being made, that the US Navy escorted a tanker through the Strait of Hormuz. And then that statement was quickly withdrawn by US officials. Markets have been topsy-turvy, but the headline this morning as we start off is the fact that most global markets are building on the gains that we saw on Tuesday. But how long will this relief rally last? That is the critical question. Let's start off with the headlines. Tensions continue to escalate in the Gulf. Israeli military launches fresh strikes on Iran while US military destroys 10 inactive Iranian mine-laying vessels after Trump warned of grave consequences if oil flows through the Strait of Hormuz are disrupted. Trump adds that the military is drawing up additional options to keep the strait open. Stocks on Wall Street closed Tuesday's session on a mixed note. The S&P 500 ends the day slightly lower as the Iran conflict keeps traders on the edge. Asian markets open largely higher as investors weigh West Asia developments. The GIFT Nifty is indicating a cautious start for Indian markets. Brent crude holds just below the $90 per barrel mark after reports indicate that the IEA, the International Energy Agency, has proposed the largest release of oil reserves in its history. Prices slide further after US Energy Secretary Chris Wright said in a since-deleted social media post that the US Navy was able to escort a tanker through the Strait of Hormuz, which the White House press secretary later denied. Reliance Industries will maximize LPG production at its Jamnagar refinery and divert KG-D6 gas to priority sectors to aid India in the time of need. Indigo CEO Peter Elbers resigns 3 months after mass cancellations of flights. Promoter and MD Rahul Bhatia takes interim charge, tells employees that the cancellations should have never taken place. Sources say the board has already identified the new CEO and Bhatia will manage operations during this transition. Okay, so quick synopsis of what we've seen in overnight trading action and just how our cues are placed right now. US markets ended mixed, like we told you in the headlines. It's still very confusing. You do not know whether this war is escalating. Is there a sort of a pause? Is there a thaw? There's just no clarity. But those missiles are still flying. The strikes are still happening. So what we saw was the S&P 500 end down 0.2%. But the other indices were absolutely flat, the NASDAQ and the Dow. Now, yesterday, the US Defense Secretary Pete Hegseth made a statement, and he said that we are winning, Iran is badly losing. So there's a lot of usual bravado talk over there. But he then went on to say that it's not for me to say if we are at the beginning, the middle, or the end of this war. It's for the president to decide. So, that's pretty much where the market is at. And the market is weighing the prospects of real military intervention, US military intervention, to keep the Strait of Hormuz open. And that's what happened yesterday. High drama. You had the US Energy Secretary, Chris Wright, coming out with a social media post saying that the US Navy has escorted a tanker through the strait. Now, this seemed like a big breakthrough. It seemed like, wow, the Strait of Hormuz is finally reopened. The US is actually escorting vessels through. But very quickly, that post was then deleted. In fact, not just this, then we had a statement from the White House press secretary, Caroline Leavitt. And she was very, very clear. And she says, and I quote, the US Navy has not escorted a tanker or a vessel at this point in time. So, flip-flop. But the oil market wanted to believe that the Strait of Hormuz is going to open, that there will be this military wall of security that will take ships through, because the oil market was down significantly. Oil fell almost 10-11% while US trading was on, and Brent is closer to 87-88 this morning as well. In fact, on the risk on sentiment, it wasn't really risk on, but generally the dollar cooled off, US bonds cooled off as well, hoping that we are at some sort of a de-escalation point in this war. Now, today the market's going to be looking at consumer level inflation data that comes out in the US. So that's something to watch for. Asian markets are building on a lot of the gains that we saw yesterday. The Nikkei, for instance, up 2%. The Hang Seng is showing mild green as well. The Kospi is up between 2 and 3% as well. And the issue with the Indian market is, will we see a gap up opening? That's not what the GIFT Nifty is indicating. And that is because we are running into a wall of resistance. This level of 24,300 has been a big mark for the market in terms of technicals. It was a big support when the market was falling. Once that support was broken, now it becomes a resistance on our way back up. So the bulls will really have to pierce through 24,300 with conviction for the market to take the next level higher. Let's talk about, of course, the fund flow picture as well, which continues to be bothersome. Again, selling yesterday from foreign institutions. In the cash market, they sold off stocks worth almost 4,700 crores. Domestic institutions were buyers, and they bought cash equities worth about 6,300 crores. So that's how we are set up. We'll keep getting you more on the oil and gas statements as we go along. But for the time being, let me welcome in our guests on the show. Ajit Mishra is joining in from Reliance Broking, and we have Gaurang Shah with us from Geojit Financial Services. Thank you so much, Gaurang and Ajit, for being with us. So I think the hope trade is on in global markets. The hope that we are past the worst, the hope that the Strait of Hormuz opens, the hope that oil prices will, cool off. Now the question is, what do you do when the hope trade is on? So Ajit, I'm going to open with you first. Is there a long trade? Do you expect yesterday's gains to last? What ahead for the Nifty and the Bank Nifty at an overall index-wide level first?
Yeah, good morning, Surabhi. So yes, yesterday was the day of relief. After the initial flattish start, we saw that market build on the gain. We have re-entered into the gap area. The most important aspects will be what you highlighted, that crude has significantly cooled off. Means after testing almost $120 mark, we are now trading close to around $87. At the same time, India VIX, which was indicating a fair, has also cooled off substantially in the last trading session. So that's the reason why we were seeing that the gain we could manage to hold by the end of the session. And today also we are seeing a slightly flattish start. But at the same time, the upside is still capped, means we have multiple resistances to cross. So intraday close to around 24,430, 550 zone will continue to act as a resistance zone. But in case if we manage to surpass that area and hold, then probably we may see a further recovery, a decisive recovery rather in the index. Otherwise, the move might fizzle out with 23,900, 700 being the support area. Banking showed definitely strength led by the private banking majors, select buying interest in some of these private banking names alongside with some PSUs as well. But 57,400, 700 mark will continue to be the strong resistance area, the long-term moving averages, which currently we are trading below. On the downside, 56, 250, 55, 900 will be the area where we have multiple supports to look at. So as of now, it's on a sell-on rise market, still a sell-on rise market, but stock-specific movement, especially in pharma, defense, or some of the other sectors, selectively we are still getting opportunities. So one should plan their trades accordingly until we see some bit of stability in the index front.
Okay, all right, got that. Ajit, so we'll keep that in mind. Gaurang, opening thoughts with you. Again, people will wonder if this is pretty much, we've seen the bottom, and whether, and also once markets start getting used to any news, good news, bad news, then they take it in their stride. I mean, the war in Ukraine kept raging for 4 years. It's still raging, but it stopped being a market event. Now, I don't want to jump the gun here. I don't want to say whether we are at that point already in the West Asia war or not. But how do you sum up the events of the last 2-3 days, Gaurang, and where are we now?
Thank you so much, Surabhi, for having me on this show. Good morning to all your viewers and to you and your entire team. A small disclosure that all recommendations that I'll be sharing with you this morning are a part of our fundamental research team recommendation. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar ideas, investment ideas with our clients. They might have their investment option over there. So, Surabhi, in the opening remarks, you mentioned the hopes, multiple hopes. My hope, Surabhi, is that common sense and wisdom should prevail upon President Trump and his loonies who go around making statements and then deleting them. And I think it is high time that, if there is any kind of, confusion and chaos, then I think it is in the White House. Because no two people in the White House from the Trump administration come and give a common statement on any platform. Everybody gives a different statement and tries to create a confusion when there is already enough confusion in the world. So I hope common sense and wisdom prevails and they draw a line as to the difference of opinion and the statements that they make. Having said that, Surabhi, whether the bottom is in place, I think that will all depend upon how the events unfold in the Middle East and how much of aggression does each one show when it comes to this geopolitical situation in Iran. The problem that we faced earlier, Surabhi, whether it was Russia, Ukraine, or whether it was Israel, Hamas, that was different. This time, why it is different? Because there is this country called Iran, and Iran has a virtual control of Strait of Hormuz, which ultimately controls 20-25% of world global sea supply in form of crude oil and natural gas. That's where the problem starts and ends. I hope that there is some kind of line drawn and there is some positive news flow. Of course, yesterday we heard that there are some backdoor level entry that US is trying to do through Oman for a negotiation. I honestly don't know, Surabhi. There is a lot of confusion in terms of these kind of fake news, if I can call that, and fake statements, if I can call that. So let's have some clarity. But one thing I believe, Surabhi, this is not the first time that we have seen this situation. We've seen it in the past, maybe a little bit more serious. And every time those who have had the courage and a little bit of elevated risk appetite have taken this as a buying opportunity and invested in fundamentally sound stock, they have been rewarded over a longer period of time. So to be very honest, as a blanket disclosure, I have not stopped my SIP, and in fact, market gave me an opportunity. I have put some lump sum investments, and if I get further opportunity, I'll definitely put that. So grab this as a long-term investment opportunity rather than short-term volatility that plays out for traders from the short to medium-term point of
view. Fair enough. Now, I want to talk about oil and gas stocks to begin with, starting with Reliance itself, because there's a lot of news. In fact, we'll go through our stocks and news, and one of the newsmakers will be Reliance. Reliance has, of course, spoken about. Let's actually put up that statement if we can, the Reliance statement. The company has said that it is going to be paying utmost importance to the priority sectors as they have been outlined by the government of India. And its focus is going to be on ramping up LPG production at the Jamnagar refinery to ensure that there are no shortages in the country. It's saying it will completely, comply with all the government directives. And the government over the last 24 to 48 hours has been giving out very clear-cut allocations as to which sectors should get priority gas supplies. So that's what Reliance is saying. It's also saying that Reliance will be diverting gas from the KG-D6 basin towards domestic use, because obviously India is the priority and energy security here is the priority at this point in time. So let's start right there in terms of just stocks relating with this entire ecosystem, the oil and gas ecosystem, and what should be done here. Gaurang, will Reliance be a buy for you, or is it too sensitive to everything that's going on? So would you stay away? Would you wait? What's the advice here?
So now it has got various businesses under its umbrella, Surabhi. And every time the AGM is there, I think the kind of statements and the futuristic outlook that the Honorable Chairman puts out in front of the stakeholders and the media and all of us, it only reinforces our confidence. As a disclosure, we've been maintaining a positive stance on Reliance for a very long time. I don't even recollect for how long, how many years. As of today also, we have that coverage on the positive side. Yes, it has best of both the worlds in terms of exploration as well as marketing. And Surabhi, one of the best thing about the refineries in the Jamnagar is that the technology that Reliance uses for refining that crude oil is very, very niche and the best available. And by the virtue of that, they can refine the heaviest of crude in terms of sulfur density, which is not the case with a lot of players. And that's one of the reasons why that news flow, when we heard that the US is going to invest, I beg your pardon, Reliance is going to invest in Texas for some refinery, is because of this technology that Reliance uses in Jamnagar of refining heaviest crude with high density of sulfur. So I'm maintaining positive stance. Look, short to medium term, Surabhi, it's very difficult to take a call. But long term, just like I mentioned earlier, These are the times where you get into quality stocks which are available at a reasonable price.
Okay, fair enough. All right, so plenty of stocks to discuss, trading ideas, what should be done in this market. Let's do one thing, gentlemen. I'll quickly run through some of the stocks that are news today, specific names that are worth calling out, and then I'll come back to you to ask you what the trades should be and what should investors be doing. So here is today's list. It's a short one, but interesting names on it. Like we told you in the headline, Interglobe Aviation, Indigo is going to be in focus. The company's CEO, Peter Elbers, has resigned with immediate effect. He has cited personal reasons, but I think the market's very clear on how this came about because of those massive flight disruptions that we saw in December. Rahul Bhatia, the MD for the firm, is going to take interim charge, and then they'll be announcing a new CEO soon. This is what we know as of now. So there's a transition underway at Indigo. Brigade Enterprises has entered the industrial real estate segment. They're looking to develop a 25-acre industrial park in Devanhalli near Bengaluru. So watch this stock. Speaking of real estate, Arvind Smart Spaces, also development in Bengaluru. They've added a Bengaluru residential project and they see a revenue potential of about 330 crore rupees on this. HG Infra has bagged orders worth about 400 odd crores. This is for thermal energy. They'll be doing civil work for a thermal energy plant. Eicher Motors has appointed B. Srinivas as MD and CEO of Volvo Eicher commercial vehicles, the commercial vehicle arm of Eicher Motors. This is with effect the 1st of April. Vinod Agarwal has been appointed as the chairman of the board. Again, the transition is in effect from the 1st of April. Vari Energy is in focus. The company's arm has signed an agreement with United Solar Holding to be investing about $30 million into the operation. So watch for this. And Reliance, of course, we've already covered. And we've just discussed with Gaurang as well. The company has promised to allocate more of its KG-D6 basin gas towards India. Okay, so with that, let me quickly go back to our experts. Now, on the oil and gas space, Ajit, first let me ask you, because it's been so volatile, intense. Oil marketing companies, IOC, BPCL and HPCL, it's a quick fire, rapid fire round now. On the oil marketing companies, have all three stocks broken a lot of support levels? Are they below key supports? Is there a trade or are they in a no trade zone?
So Surabhi, after this decline, I feel consolidation is more likely. So one should refrain from any aggressive positioning at current levels. But in case if we see any rebound or like bit of a consolidation, then probably we might see an opportunity to go long in. But at current levels, it's an avoid.
Okay. All right. Got that. On the oil and gas side, what about upstream, Ajit? ONGC, Oil India. People who went long, hoping to, do a nice quick trade on this flare up in oil prices, they'll be wondering because oil since then has cooled off dramatically. And now you have all these promises of the US military supporting ships, so on and so forth. So for ONGC and Oil India, the upstream players, what would your recommendation be?
So that's correct, should be. In fact, traders might be wondering that why we are not seeing any kind of traction despite the kind of uptick. But it's more about sustainability at the higher levels. So which crude didn't sustain, and that's why we are not seeing any kind of follow-up move. But All India comparatively looks better. Means after like almost 5 weeks of consolidation, we still feel that stock has potential to consolidate and inch toward, let's say, 520, 530 area. So probably this area, close to around 20 EMA, is a zone basically where one can look to accumulate with the 450 as a closing stop loss and potential target of 515 to 520 in the near future.
Okay. And finally, Ajit, the gas players, again, intense volatility, Petronet, LNG, IGL, MGL. For people who've seen a sharp drawdown in Petronet LNG, I mean, does it now offer an opportunity to buy in at all? There'll be people who are wondering, especially people who are looking at some sort of portfolio positions, whether these are levels to enter. I don't know. Too risky?
No, Petronet looks comparatively better. Means if you see, it's been almost 6-8 months of consolidation around 270, 280 area. And in fact, there was a strong rebound also from that zone. So we are retesting that zone. So that gives us comfort that downside is capped. So in case if somebody is looking for accumulation with a medium to long term perspective, definitely it's a good zone to look at Downside 270, 250, 60 zone is multiple supports that we have on short-term, medium-term charts. And gradually the stock can again inch towards 310, 320 area. IGL, MGL, I still feel that they are maintaining the negative bias. So avoid any fresh positioning. But in case if you have any existing position, maintain the recent swing low as a stop loss and use recovery to reduce your positions.
Okay, all right, got that. We'll start getting our pre-open rates in the next, I think, couple of seconds. So let's see how it goes, because the GIFT Nifty was telling us that it's going to be a little more cautious opening for the Indian market compared to what we're seeing in the rest of the world. So let's see how it plays out. Right now, the pre-open is showing up a nice shade of green, actually. So it seems the bulls want to have their way. But I think we should just wait a while and see how this plays out. For instance, the reason why the pre-open is up 200 points is Reliance is popping 6%, which, like I said, let's give it a couple of minutes and then figure it out. Move on Wipro at 10%, Reliance at 6%. So these are rates all over the place. I think we can give it some time. Gaurang, let me ask you about Interglobe. What did you make of the announcement of Mr. Peter Elbers's resignation? Anyway, the stock has been slammed badly because of the flare-up in oil prices. What's your recommendation now?
I was wondering why it took so much time for him to resign. Honestly, Surabhi, he should have done it then and then, not wait for 2-3 months. I mean, he was solely responsible for the chaos and the agony and the pain that the flyers had to go through. And honestly speaking, he's brought disgrace to the aviation sector and to Interglobe Aviation. Having said that, this is my personal opinion, Surabhi. We've been positive on Interglobe Aviation. It has been, I think, the levels that we saw sub 4,000 levels for some time when that entire chaos that broke out in the first week of December 2025. It's one of the largest LCC model carriers. Profitability is also decent flight, decent number of aircrafts as far as the fleet is concerned. Possibility of Jewar Airport in the north opening up somewhere mid of this year will open up plenty more opportunities. We already saw opening on commercialization of Navi Mumbai Airport, which is again a big opportunity. So we're maintaining a positive view on Interglobe Aviation. And I think today there might be a bump up because of this so-called Peter Elbers has now resigned. And I hope the gentleman who comes in will be able to fill in much more than what Peter Elbers has done. So we've been positive on Interglobe for a pretty long time. Yes, we have a buy recommendation.
Okay. All right. So while we're waiting for the pre-open session to settle, and let's keep flashing the pre-open rates for what it's worth, we have quite a few queries coming in from our viewers on YouTube. So good morning to everybody who's joining us now on YouTube. Where do I begin? There's a question from Sai Bharadwaj saying, is it the right time to enter in PSU bank stocks? What's your recommendation? Actually, let me ask both the guests here, because obviously they've been whipsawed in this entire volatility, PSU banks. Ajit, technically, how is the PSU banking index looking versus, say, the bank Nifty? And would you advise any long trades on PSU banks now?
So Surabhi, we were seeing that a strong outperformance within the PSU banking space while the banking was holding strong, and still we feel that after this recent correction, we are holding above the medium-term moving averages on the daily chart. So this gives us comfort that yes, the trend has still not turned bearish. It's just that we are seeing correction after a strong phenomenal move. There could be a bit of a consolidation, but after this decline, I feel that the stocks which were leading from the front, stock like SBI, Indian Bank, Maharashtra Bank, Canara Bank, some of the names wherein we were seeing consistent, price action. This is something that one can look to accumulate, but not at one go. Gradually, one can look for accumulation with a view of at least 1 month to 2 months. Near term, yes, we might see the upside cap, but overall the trends still look positive. So it's a buy on dip candidates.
Okay, so buy on dip, got that. Would you concur on the fundamentals? Because we've seen a lot of price damage, Gaurang. Now, if someone wants to take exposure to banking stocks, what would be your preference, PSU or private sector? And give us some names as well.
So let me draw down a small model portfolio for the benefit of your viewers and picks from private sector banks, public sector banks and NBFCs. So that will be a nice, it'll have clarity. And we've been positive on both. We don't have bias towards anyone. So in public sector banks, we'll pick, there are many, but 2 from public, 2 from private, and 2 from NBFCs. So it will be State Bank of India and Indian Bank from the public sector banks. From the private sector banks, I would possibly go with a large cap and a small to mid cap. So Axis Bank and Federal Bank, which has been doing wonders over the last couple of quarters on fallback of earning visibility and improvement. In the NBFC category, I would try to list down not 2 but 3. So you have Bajaj Finance, Shriram Finance, and L&T Finance. I think this will be a very strong, dedicated portfolio in the entire BFSI segment.
Okay. All right. So that's quite helpful. It gives us, a nice mix of stocks across the financial space. So take that point. Let me see if I can get 1 or 2 more questions going. Bank of Baroda, I think, Sai, you've got your answers from both the technical and the fundamental expert here. Alex is asking for a view on Phenolics cables. Yesterday, actually, a lot of these wire and cable stocks came under pressure. There's concern about copper supplies, apparently. What did you make of that, Gaurang? This whole pressure on wire and cable stocks. Do you like anything here? Fundamentally, would you use the dip to buy anything?
So, yes, Phenolics cables is there in the coverage. We have KEI Industries, Polycab is the other one. There are 3 in this sector that we have positive coverage. Even I would possibly wires and cables, I would also include Havells India, Surabhi, because it has got a diversified product profile, including cables and wires. And one thing is the Surabhi that if there is going to be a sustained supply side issue for the raw material, I think some of these companies have a very niche marketing strategy, and they very simply pass it on to the consumers like you and me by increasing the prices. Now it will depend upon each and every individual company as to the inventory levels and how long they can sustain and how much of it they can pass on to the consumers and user rather. So, but we remain positive on these 3-4 names.
Okay. All right, got that. By the way, the rupee has also opened up. So let's fire up the dollar rupee. The rupee has also been volatile in line with just what's happening around global markets. The dollar has been on the back foot Tuesday and Wednesday as well. We're not seeing a dollar surge because there's hope that things will kind of at least stabilize, if not normalize. And that has helped the rupee, at least in yesterday's session. This morning, we're looking at levels of 91. 80, now almost 91, so 91, 92, it's inching back towards that 92 handle, so it's still very, very tentative on the currency. So let's see how this plays out. Remains very, very perilously close to that 92 handle. It's all about what happens next. Is the US somewhere close to the end of this war? Is it in the middle? All these promises of keeping that Strait of Hormuz open, will the US actually make good on those promises or not? That's what is the most important point for markets right now. So let's do one thing before we go on with more stocks. Just hear out what Caroline Leavitt, the White House press secretary, had to say. These are the kind of questions that she was bombarded with yesterday on the Strait of Hormuz, on keeping the flow of oil going, on allowing countries like India to buy Russian oil. Hear out her replies.
The President and the Secretary of Treasury and the whole national security team came to this decision because our allies in India, as you know, Lalit, have been good actors and have previously stopped buying sanctioned Russian oil. So as we work to appease this temporary gap of oil supply around the world because of the Iranians, we have temporarily permitted them to accept that Russian oil. And this Russian oil was already at sea. It was already out on the water. So this short-term measure, we don't believe it will provide significant financial benefit to the Russian government at this time. President Trump fully expected the rogue Iranian regime to try and disrupt the global markets. That's why President Trump and his energy team have been planning for this long before the strike and have moved quickly to address these temporary disruptions. Thus far, the Trump administration has offered political risk insurance to tankers operating in the Gulf. The president and his energy team are closely watching the markets, speaking with industry leaders, and the U.S. military is drawing up additional options following the president's directive to continue keeping the Strait of Hormuz open. I will not broadcast what those options look like, but just know the president is not afraid to use them. Rest assured to the American people, The recent increase in oil and gas prices is temporary, and this operation will result in lower gas prices in the long term. Once the national security objectives of Operation Epic Fury are fully achieved, Americans will see oil and gas prices drop rapidly, potentially even lower than they were prior to the start of the operation. And we will live in a world where Iran can no longer threaten the United States or our allies with a nuclear bomb. Moving forward, the stated objectives for Operation Epic Fury remain the same: destroy the terrorist regime's ballistic missiles, raise their Iranian missile industry to the ground, ensure their terrorist proxies can no longer destabilize the region, and ensure that Iran never obtains a nuclear weapon. President Trump remains confident these goals will be accomplished in swift fashion.
Okay. All right. So those were the statements that came out of the White House. Getting back to our conversation, I want to get your sense on some of these FDI, China FDI related stocks as well, Gaurang, because that's been the new development, right? India easing FDI rules, so it'll probably allow more Chinese entities to come and take investments or forge partnerships when it comes to electronics manufacturing. Electronics, I think, is the one sector that is really under the spotlight. What did you make of the announcement? Does it have any bearing on listed stocks in the EMS space, like Dixon say?
So we have coverage on Amber Enterprises, CG Power, and PG Electroplast, Surabhi, in this sector. And we know what Chinese are all about and what Chinese products are all about, to be very honest. And this is not the first time. Even in the past, there have been approvals given to Chinese companies, and very recently also some of the Chinese companies who are into manufacturing of mobile handsets, etc., how they've been evading certain or exploring loopholes to take some funds back homeland. Having said that, my sense, Surabhi, is purely that even if there is any approval that is going to be given to any Chinese company, whether it is EMS, whether it is cap goods engineering or any other sector, it's going to come with a very limited measure and with a lot of restrictions. It is not going to be a free for Chinese companies market in India. It's like once bitten, twice shy. So even if the government is going to allow, it's going to come in with a lot of restrictions and a lot of monitoring and reporting. So I don't think we need to really worry. Okay, short, medium term, because of this news flow, you could see some reaction in the sector and the stocks related to it. But long term, we remain on these three stocks, I beg your pardon, that I mentioned.
Okay. All right, got that. Let's now revisit the pre-open session now that things have completely settled down. We're only 3 minutes away from the actual market opening. The Nifty is down 30 points in the pre-open session. And let's see what its pain points are, because the color as we start is slightly red. So on the downside on the Nifty, watch for some financial stocks. ICICI Bank, Bajaj Finance, Kotak Mahindra Bank, HDFC Bank. A lot of financial stocks are weak as we start the trade. Then let's see how it plays up. Titan is slightly lower. Infosys is down about 0.5% as well. So this is, and even Bharti Airtel for that matter. So these are some of the big stocks which are keeping the pressure on the Nifty this morning as we get ready for the open. On the upside of the screen, there's Reliance, which is up about 1%. There's Geofinance, up about 1% again. Wipro is managing quite a nice gain, 1.3% in the pre-open session. So that's how things are, at least at this point in time. Some of the stocks relating to water are actually showing up quite nicely on the screen because of this Jal Jeevan mission getting another extension. So, for instance, Shakti Pump 9% higher, I can see straight away. Oswal Pump 6% higher. This is another sort of trade in the market that seems to be quite visible this Wednesday morning. Stocks relating with the water ecosystem. And then there are some of the fertilizer players, because it's very clear that they will keep getting gas, and the government has made fertilizers also a priority sector after domestic LPG consumption. So stocks like FACT also up 5.5%. Okay, finally getting down to the top trades. Ajit, so as we get set for this session, Which stocks, index, what will you go with? What are the trades today?
So there'll be only one sector wherein we see strength, comparatively to the entire universe, is pharma, wherein, despite all this, volatile swings in the index, the index is not only holding strong, in fact, we are inching towards the record highs as well. So Glenmark from the pharma basket is something that one can focus on. Yesterday, we had a fresh breakout from the consolidation range, and we are anticipating that this move is likely to continue, with 2360 being the immediate target area. With 2150 as a stop, one can go long in Glenmark. Then we have CG Power, which has witnessed a consolidation range breakout also in the last trading session. So we expect this momentum to further carry, and 754 is what we are eyeing as an immediate target. So with stop at 710, one can accumulate CG Power also at current levels.
Okay. All right. Ajit, thank you very much. You have a good trading day. The market has just opened. We'll let you go and kickstart your trades. And very quickly, let's take a look at what's happening on the screen. What we have is a very, very quiet start. Very cautious, not doing too much. Look at the Nifty right now in the opening session. 30 points lower is where we are at. The bank Nifty is down about 0.25%. So like the pre-open was suggesting, it's pretty much in sync. Banks are exerting some downside pressure on the market this morning. It's not too much, but you have a little bit of a red here and there. So HDFC Bank 0.5% lower, ICICI Bank 0.5% lower, State Bank of India is about 0.5% lower as well. Then some of the non-banks, the NBFC stocks are also a little cautious. Shriram Finance, for instance, starting down about 1%. What else do we have here? Bajaj Finance is down about 0.6%. So financials are generally a little cautious. On the downside, I can also see a Mahindra and Mahindra. Let's fire up all the Nifty losers now. Let's get to stocks. Stocks. So you'll see banks, you'll see non-banks there on that Nifty losers tally. You'll find names like M&M. You'll find names like Apollo Hospitals. So it's mixed, but financials are weak. That's a very, very clear starting point today. Eicher Motors is seeing some pressure as well. A little bit of IT is weak. I can see TCS and Infosys, both of them are down between 0.25% to about 0.5%. That's what we have at least at this point in time. So that's your weak link of the market. Now let's see the gainers, because the Nifty is flat. So there is a nice offset coming in thanks to Reliance Industries. Reliance is powering through with a gain of about 1.3% this morning. Wipro is the other one that's looking really smart, 1.5% higher. There is some buying in Sun Pharma, 1.5% there as well. Tech Mahindra, Jio, Interglobe Aviation, Tata Steel. Actually, a lot of metal and commodity stocks are doing quite okay this morning. There is Tata Steel, which is up. I noticed Coal India also on the higher side. Coal India is up about 1%, little more than 1%. Interglobe Aviation has been hammered for the past so many sessions. This morning, it's up 1%. That news, operationally, it's not coming as a shock to the market, the resignation of Peter Elbers. And therefore, the stock is, pretty sanguine at this point in time. And Indigo has lost about 8% in March already because of this war and the whole West Asia crisis. So this is what's going on. Let's see what's happening beyond the Nifty. The mid-cap index is up about 0.3%. It's doing better. We'll get the mid-cap gainers. Okay, so no, those are still the Nifty. Yeah, those are the Nifty gainers. We'll get the mid-cap gainers going as well. HG Infra, which has won a contract, is soaring 8-9% higher. It was one of the stocks in focus today. It's up about 8.5%. Happiest Minds Technologies continuing its run from yesterday, up 4.5%. Happiest Minds has increased its guidance for the year. It's sounding more optimistic on its business. So Happiest Mind shareholders are really, really happy between yesterday and today. Stocks up another 4.5%. What else stands out? Let's look at the oil and gas space. A little bit of a green on IOCL, BPCL, HPCL, because oil prices, at least, are still below $90 a barrel, at least last I checked. Petronet is up about 1% as well. So these are some of the early gainers. By the way, if I talk about some of the other major movers and shakers, look at Adani Total Gas, 5% up on Adani Total Gas. NCC is up about 5%. TTK Prestige, 8% higher, suddenly really bursting through. TTK Prestige, make all that cookware, including the pressure cookers. That's a stock that's in focus as well. So this is where we are at. Mid-caps generally doing pretty okay. The mid-cap index is looking much better. Gain of about 0.5% on the mid-cap index. Lots of movers. Tejas Networks is up about 4% as well. Let's keep firing more mid-cap gainers and losers for you. It'll give us a sense of where the action in the market really is at this point in time. More gainers than losers for sure. Not too many losers in the mid-cap screen. Chola Investments, HDFC, AMC, those are some of the losers. But otherwise, it's looking pretty good, at least at this point in time. So that is the Nifty gain of about 24 points at this juncture. The small dip is getting bought in. There is a propensity to buy. There is not a propensity to sell this morning. The market mood seems to be to buy that dip. And that's showing up in Tata Steel, Reliance, Sun Pharma, Wipro, Jio Financial. A lot of these stocks are still up and about. Okay. So this is what we have at this point in time. Let's do one thing. I'll leave you with today's stocks and news, and then we'll welcome our next guest on the show. But quite a few interesting stocks in focus, starting, of course, with Reliance itself, saying that it's going to shore up LPG production, that is going to be diverting the KG-D6 basin gas towards use here in India, because India's priority at this point in time. So Reliance is in focus. Interglobe is in focus because of the resignation of Peter Elber. So in case you missed all the stocks and news today, check out this list, and we'll be right back. Okay, all right. This is what we have in the market at this point in time. It's a very, very quiet Wednesday. We are not getting a big move on the index. The Nifty is flat. What we have is the mid-cap market doing very, very well. And the mid-cap index, would you believe it, early in the morning is up almost 0.75%. You're seeing a gain of 0.7% on the mid-cap index. The mid-caps are doing their own thing. The market is in the mood of focusing on stocks right now, till we get more clarity on what happens on the war, and then therefore what happens to larger stocks. Okay, so in the meantime, let's actually divert our attention and talk about what mutual fund investors have been doing. And they have largely been buying. Throughout the last couple of days of turbulence, we've seen domestic institutions have been constant buyers, and DIIs have been buyers because mutual funds are being backed by investors themselves. We had the data come out, the monthly mutual fund inflow data, and we continue to see a very, very steady increase in inflows towards equity funds, though of course hybrid funds are also getting money, multi-asset funds are also getting money, but equity is fine. Month on month, let's put the graphics up on this, and then we'll introduce our next guest. Month on month, there's a small dip in the equity inflow, but still, I mean, on a monthly basis, mutual funds are drawing in between 25,000 to 30,000 crores into equity funds. So where is the story headed? Yeah, that's the number that I was talking about. So you can see it's averaging, and this is the last several months of data that we pulled together. It's been averaging between 30,000, 33,000 in a good month when the market wasn't looking at a full correction. And the data for this month is about 25,000 crores and so on and so forth. We'll discuss these trends, large cap funds, mid cap, small cap funds, and how the numbers have been. And to help us do that, we have today with us Mr. DP Singh, Deputy Managing Director and Joint Chief Executive Officer at State Bank of India Funds Management. Mr. Singh, good morning. Thank you so much, sir, for taking out the time and being with us.
Good morning. Good morning,
trade war
madam.
or real. Thank you so much, sir. It's so good to have you. I was just thinking, trade war ho, geopolitical war ho, AI war ho. Look at the Indian investor. He or she is just keeping the faith and keeping those SIPs going. Your first thoughts, sir, on overall the market, the move, and the inflow data.
Absolutely. No, absolutely. Salute to the Indian retail investors who are having complete faith in the market and complete faith in the India growth story. And when we look at the numbers, the SIP books which have been created in mutual fund industry are the saviors of the market. And when we talk about, I was listening to your commentary on the DIIs putting in money every now and then. So that clearly means DIIs are nothing but the aggregator of the retail investors' money, and they are putting money on behalf of the retail investors. And the trigger amount is something which is very, very steady. And when we look at February number, when maybe little less, people are saying, but this is a 25 days money because one, it was a truncated month, 28 days month, and then 27, 28 were also holidays. So all those numbers for 27th onward, 25th onwards for the month will factor into the month of March. So that we have to understand. With 30,000 crore of money coming in every month, on an average it is 1,000 crore per day. So 1,000 crore per day means if 5 days are not there, it's less by 5,000 crores. So it's not 5,000 crore, at least 3,000-4,000 crores. So that's what we have to keep it in mind. And this steady growth on ongoing basis is keeping the market very, very steady and very less volatile than volatility has been too much in the recent past, but that's part and parcel of the game. But yes, people are getting money, getting units at a lower cost that will make up in future when things are becoming normal. So that's the story of SIPs, and the story of Indian markets is story of SIP success story.
Yeah, absolutely. The story of SIPs, and if you pull up the SIP data, this systematic investment plans, there's a minor dip from 31,000, but as I think DP sir explained, that's because February has lesser number of days. So therefore, but otherwise those SIP flows have been very, very steady around 30,000, 31,000 crores on a monthly basis. Mr. Singh, what did you make of the gold and silver flows? Because that's where so much attention is, right? And after 24,000 crores coming in January, in the Jan FOMO, gold inflows, at least in the ETFs, they have reduced a bit. In the meantime, the regulator has also announced a lot of steps to curb volatility, to see how the NAV has to be calculated for gold ETFs. Your thoughts on these precious metal funds?
No, I think when we look at the overall ETFs, this is not only the ETF money put in by the investors directly, but even by the funds like multi-asset allocation funds who have been allocating money into the precious metals. They also invest in the gold ETFs. And in the month of January, fund managers, to their wisdom, they reduce the weightage to the precious metals. Even if I talk about my own fund house, so our fund house had as high as 18 to 20% into the precious metals. But a month before that, we reduced it to 6 to 7% because we thought that it's too much run up, and to safeguard the retail investors from getting into it, we reduced this thing. To our allocation to the precious metals. And if you look at the portfolios of various fund houses, you will see that money has cooled down. And it's not only, and second, see, India is such a big market, so many number of people want to go with the flow when the wave is in favor of gold, and they were putting in money. And these numbers which we are looking at, these are the net numbers, right? So some people who put in money, they would have booked profit also. I've not seen the gross numbers, gross of gold funds, but I'm sure the net number of 5,000 crore is because of the people who had put in money earlier. They would have booked profit when the market is, when gold prices are going to come down or silver prices are going to come down. So it's at the end of the year, we'll see how it has moved on the year basis, but month on month basis, I don't think is a right way of looking at the numbers.
Okay. Mr. Singh, what is the overall sense? I mean, I don't know if we can actually compare with any past trends or not. In the last 3-4, actually it's not even 3-4 days. Now we've been in this war for more than a week. What has the investor been doing? Have you seen redemptions? Have you seen inflows? What has happened since this war broke out last week?
See, redemptions and inflows happen simultaneously, right? But if I really talk about the net numbers are positive during the last 4 or 5 days. And we don't get the direct put in by the retail investors and put in by the fund houses or DAs, whatever you say. But net we are positive for sure. But see, we have to see who is putting in money and who is redeeming it. Because there's a huge set of people always when penetration is slow, there will always be people who are coming in, and the people who have put in money earlier, they will be going out. So actually, it's something, but net it is positive only. The last 3-4 days, market has corrected. We have seen more flows coming into the market, into the funds rather than the redemptions. All redemptions put together.
And largely, at least for SBI. Bulk of these flows are more positive in what kind of funds? Equity, are people choosing to go more towards the hybrid side, or is it multi-asset? Because there's a lot of confusion about where to invest now, given that things are changing so quickly, and this seems to be this. Yeah.
It's definitely a trend towards this hybrid funds in general and multi-asset in particular. Some tactical money is definitely coming into equities. As I said, the funds are putting money into the equities and all, but retail investors, the fresh money is coming in mostly into the hybrid funds and multi-asset allocation fund definitely is getting much more money than any other hybrid fund. And second is the balance advantage fund. These are the two funds which are getting more money. Balance advantage fund and the multi-asset allocation funds.
Yeah. No, absolutely. I saw the numbers, and let's pull them up. Let's pull up the data for hybrid funds and for multi-asset allocation funds. I remember giving the data for them as well. And it's been very steady. Multi-asset allocation funds have found a lot of traction with investors because they invest across asset classes. There's some fixed income, there's equity, and obviously there's exposure to precious metals that most of these funds are taking. So overall, the flows are strong. In January, of course, hybrid funds went through the roof. I mean, 17,000 crores. But even in February, the number is not bad at all. Almost 12,000 crores of flows coming in hybrid funds, and multi-asset funds, like Mr. Singh is saying, have been drawing in the bulk of this money. On commodities and asset classes beyond equity, I think that's where the conversation is, sir, because the Indian investor, while he or she is keeping the equity sips going, incrementally, I think people are thinking about asset allocation, because that's what the market has taught us in the last 15 months.
Absolutely.
So, gold and silver ETFs, do you expect them to keep gaining more traction, or do you expect more traction in multi-asset? What are your thoughts?
See, multi-asset allocation funds are likely because, see, if you look at the commodities per se, as per the regulations today, we can play only in the precious metal, that is gold and silver only. There's no other asset class. But in multi-asset class, we can put money into if not directly into commodities, but the companies which are dealing into the commodities, because commodities are having a very good run. So multi-asset allocation, it may not be directly into commodities, but the commodity stocks are definitely are getting putting more money into the commodity stocks. That's what we are also doing. And then there are some specific funds like which are putting money basically into the commodity stocks. Like we have SBI Coma Fund. So SBI Coma Fund is getting good traction from the wealth counters, from the very evolved investors. They have started putting money there. So those are the funds. Those are not in too much in flavor, but the evolved investors who want to get, as you rightly said, the asset allocation, if not directly into commodities, because that is little not an easy work for any individual to get into the commodities directly through futures and derivatives and all. But they are playing around with the commodity stocks. And we are also running that fund very actively.
So that's the multi-asset category, right?
Yes, multi-asset category or commodity funds. Like we have SBI Coma Fund, which is investing not only in gold and silver, but into the commodity stocks as well.
Okay. So commodity funds, that's interesting. So I'll make that the last question, sir. What would you advise investors? Because investors are increasingly looking for more incremental options, for incremental money that they're looking to invest. Because clearly there's no clarity on how quickly the equity market turns around. But is investing in commodity funds a risk at this point in time? What are the guardrails which are in place for some of these commodity funds that Indian asset managers are running? And what would your final advice be in this really confusing environment?
No, commodity funds, of course, is come under the thematic category, which is a high risk, high reward kind of category. So one can invest say 10% of their portfolio into this. And for others, I think the combination at this point of time, markets are very volatile. See, there's a set of people who are evolved, who know what is the risk reward into this. They can definitely go into the equity funds or equity hybrid funds, etc. But the people who are not having lesser risk appetite, but they still want to play in the market, I think the combination of arbitrage fund and the multi-asset allocation fund is the best course at this point of time. If they want to take, say, around 15-20% of the active equity weight into their allocation at this point of time, they don't want to miss out the bus, but they don't want to take a very aggressive call also. The 50% into arbitrage, 40% into multi-asset allocation, and maybe 10% into some coma kind of fund, which is SB coma fund or any other diversified fund also. That could be the way forward.
Okay. All right. Thank you very much, sir, for joining in. Always a great conversation with you and very, very helpful. It gives some clarity and much needed advice to our investors in these markets, which are so confusing and so very volatile. But mutual funds all the way. Absolutely. Thank you for joining in. You have a great day and we'll connect again soon.
Thank you. Thanks so much.
Thank you. Thank you very much. Okay, by the way, so let's check out what's happening in the equity market and then we'll move to a commodity conversation full throttle. Our next guest tracks global commodities very, very carefully. The Nifty is volatile. It was up about 15-20 points. Now it's down about 60 points. Lack of clarity. The bank Nifty is under pressure. It's down about 0.5%. This is what's going on. By the way, international media reports are coming through. I'm getting these reports from CNBC. US forces have sunk 16 Iranian mine layers because the reports are indicating that Iran has been laying a lot of mines throughout the Strait of Hormuz. And US forces are now targeting these boats which are laying the mines. So it's really gloves off completely around the strait and around the region as well. And because of all of this, let's check the price of oil. Let's get to international oil prices and see where they're at. Brent around $87 a barrel. That's what we have. NYMEX around $83 a barrel. That is pretty much where we're at. Okay, so speaking of oil, let's turn our full attention now to what's happening with these markets. We have Peter Maguire of trading.com joining in. Peter, good morning. Great to have you on the show.
Lovely to see you, Surabhi.
Peter, I hope you got some rest. Did you manage to get any sleep in the last 4 or 5 days? Or were you awake around the clock tracking those missiles?
Very, very dramatic. Very, very dramatic. And I'll tell you what we saw on Monday, Surabhi, was just absolutely very hard to actually fathom and take on board. I don't think I've ever seen a blowout like that in that short period of time. And I was also excited to watch you guys win the cricket. So it has been a big weekend and it's still going.
Yeah, I know. We were hoping to come back with full celebration on Monday morning with the cricket. But I admit, while that match was on, I was looking at these headlines coming out of West Asia and the oil depots blowing up and gave me a really eerie feeling. And then, well, lo and behold, Monday happened, and it's a Monday that we'll remember for a long time. 25% surge in one single day in oil prices. So it was historic for all the wrong reasons. But okay, so Peter, here we are. As I speak with you, there's information, there is misinformation. There are claims about US ships escorting vessels through the strait. Then those claims are getting withdrawn. It's very hazy out there. What have you made of all the news and the noise just in the last 12 to 14 hours?
Well, I think, Surabhi, I'm certainly keeping a very close focus as far as what the news flow is and what the markets are digesting. And that is really very evident with the volatility that we're seeing across both Brent and WTI. And the moves over a short period of time, I'm talking within 15 or 20 minutes, can be literally $3 or $4. So this is just dramatic as far as volatility. And the focus seems to be very much on, is President Trump going to those escorting of ships? What's happening with Cargill? And that seems to be gaining in traction, the awareness of that, and also what the IEA is stepping up to the plate with as far as the possibility of having, I think it's about 182 million barrels of crude to as a buffer. And we'll know further about that, or more about that, Surabhi, over the next matter of probably 6 or 8 hours.
Yeah, absolutely. But the issue is that the market has reacted to a lot of commentary so far. Commentary that the US is going to open the strait, that these naval vessels will provide this, wall of security, the safe passage, and ships will start sailing again. Do you think this pretty much puts a lid on the upside now, for now at least?
Well, it's how long till that actually, I think, gets traction, and whether that is going to be in the next matter of 24 hours, or is it going to be 48, or is it going to be a week? So that's very much a work in progress. And the way the markets have been, it's very hard to second guess them, because trends come in and then all of a sudden it jumps $5 or $8. So I think that in the short term, volatility is going to probably stay at this sort of level. And let's just see what the strategic focus is of President Trump and his, the Navy Armada, and whether they actually live up to doing what they say they're going to do. So, and of course, what happens as far as IEA. So, a lot to really unpack and take on board over the next 12 to 24 hours.
Absolutely. So, okay, let's break this conversation down into two parts. One is if the strait really miraculously opens, and if at least 15, 20, 30% of the traffic can start transiting. That's one scenario. The other scenario is that the strait remains practically shut, but all these big superpowers, the G7, they release strategic reserves. So I'm going to start with the second scenario first, that the Strait of Hormuz is shut, but the G7 release some reserves. How much oil would you expect them to release, and what could be the potential implication on prices?
Well, first off, they're saying about 182 million barrels. The second part is that would be the IEA and the G7, and of course that's 32 member countries that make up that group. Now, it's not a normal occurrence. It's only happened 5 times in history. One was with Libya and their civil war, 2 times with Ukraine in 2022, going back once to the Gulf War, I think that was about 1991, and then after Hurricanes Rita and Katrina. So these are big geopolitical and weather issues that make these decisions, and that's where we're at the moment. So if that was to play out, then there's going to be plenty of oil for a short period of time, I would say over a week or two, until we get a clear indication of what the footprint and what this war looks like, and that's time will take us to that event.
So just to go back on the numbers again, oil right now is about 86, 87. How much will they have to supply to the market, all these great powers, the IEA, G7, how much will they have to release to say pull oil back down to mid 70s to 80? It was right there before the conflict started, right? We were around 70.
Exactly. Well, yeah, exactly. And even in the mid 60s, it's got 1.2 billion with a B, 1.2 billion barrels of reserve. That's what makes up the IEA's emergency public stores. So there's the first part. The second part is they've got plenty of supply there to bring on board to the market. And it's just that will be a drip feed, and maybe the first 182 million is going to be absorbed very, very quickly. And then how protracted is this going to be? Is it going to be is it going to be over by Easter? Is it going to go well into April, or is it going to run into May? So these are all of the differing scenarios that go into the melting pot as far as decision-making processes.
Yeah, no, absolutely. So, and you're right, they wouldn't want to completely come in with everything in one go. So they'll release strategically, bit by bit, but I don't know if that really, helps the cause in terms of bringing down the price because there's so much demand.
Yes.
So that's one scenario. Okay, now the other scenario, Peter. Yeah, go on.
Well, that's very true, but also it seems to be that the volatility, and that's the other side of it, Surabhi, we've got to be very conscious from a trading perspective, and I'm just looking at the numbers. We were at 121 the other day on Monday, and that was for WTI, and then we're at 83. I mean, that's a big wipeout. That's 33% down. We all understand those big whipsaws. That can happen again. It's not as though it can't happen again. It can happen again. We've been to oil at 148. Funny enough, I was in New York that week, and that was 2008 July, and I've seen oil at minus $35 a barrel, where they were paying you to take the oil. So there's plenty of movement, and I think we're going to see again increased volatility over the next matter of days until we get some sort of indication what is going to happen. And I'm also conscious as far as the LNG positioning with Qatar and countries that are reliant on that. So yes, there's going to be a lot of hurt, I think, and that's why these IEAs and the G7 are really stepping up to the plate to try and minimise the fallout from all of this.
Okay. Got that. Now the other possibility, which I'm sure was fantastic if it comes through, those tankers finally start, and the gas carriers, they finally start sailing through the strait. I wouldn't want to be the captain of that ship or the owner of that ship, considering all these reports of mines at the bottom of the sea. But what is the probability right now? You think that the strait can open, at least partially? Will that really immediately, pull down prices in a big way?
I think it'll be a matter of time for that to take place. I mean, there's a lot of tankers there, and they've all got to be escorted through. And if the US US Navy and the Armada which would be engaged in assisting in the safe passage through the Strait of Hormuz, then it's going to again take a matter of weeks to make sure that supply isn't interrupted. You've only got to have one that hits a mine or one that gets attacked by a drone or whatever, and I think that would really put a lot of fear back into the shipping market. And the other side, of course, is what happens as far as price. So I think price will stay at that 80 to 90 or even $100 a barrel until we get a safe passage for a given period of time. So it takes the heat out of it. And I don't think that that's going to happen in the short to medium term, Surabhi.
Peter, finally, we've got to talk about gold. I mean, you have a full-blown regional war in the Middle East. Gold has barely moved. Now, I know it rallied a lot and, we can argue a lot was in the price, but still, I'm in such a shock. And yet, gold refuses to move. What have you made of it?
Sure. Well, I think margin calls are a big component of that. We've seen massive margin calls across the energy complex, and I think that's where a lot of the smart money traded. Secondly, you did see gold go Monday week ago. It was at 52.50, went to 5,400, then back at around about 5,050. Currently sitting at 52.20. It's whipsawing, but it's in that tight channel. It doesn't seem to get a breakout to the upside or under 50, say under 5,000. So until we get some sort of, again, a horsepower or something to drive the market and drive it significantly higher, I think it's range bound for the short to medium term because the focus is very much on the energy complex. I do agree with you that it should be, I would have thought it'd be 6,000, but that's not the case. And I think a lot of it was because of funds and raising of margins and margin calls for a lot of traders across the globe.
Okay. So all the more active, bigger traders, they're dealing with those margin calls. They don't have immediate cash maybe to quickly go and take a long gold trade. That's interesting. So, Peter, final question. Now, for the next couple of weeks at least, if I were to ask you to suggest what commodity should I go long on, what would it be? And where do you see a short trade?
Wow. I want to. That's a hard question.
Dollar, bonds,
I normally,
crypto. Yeah. I'm leaving it open for you. Yeah. What's the best long trade and what's the best short trade right now?
I think copper's got some upside, and so has aluminium in the short to medium term over the next week or two. The other side, of course, is from a short. I think the US dollar index will get a leg up from here as well, with bond rates the way they are. So I think that short trade. Gee, that's a difficult one because you've got war issues, you've got so many other components that drive sentiment. I can't think of anything that really. It's a day-by-day proposition. I could be out by 20% by picking the wrong market. So at the moment, Surabhi, I want to just watch the market and watch it intently, because that'll give me the opportunities I think that are going to present themselves over the next matter of 5 to 10 trading sessions.
Okay, so wait and watch and then decide. That's the approach Peter is taking, for now at least, right?
Yes, absolutely, for now.
Got that. Well, you have a fantastic Wednesday. Enjoy your evening, Peter. Thank you so much for joining in and making sense of these absolutely confusing and chaotic markets for us. Thank you very much.
Thank you, Surabhi.
All right, well, that's a view from trading.com coming through on oil, on gold, and on just how global trades are moving and why gold isn't moving as you would perhaps expect it to in times of severe global risk off. I'll just do a quick check on our equity market before we talk about today's brokerages. Equity market is completely range bound. You are seeing about a 0.25% decline on the Nifty. The mid-cap index is up about 0.5%, so it's just quiet out there. Trades are more about specific stocks, more about individual stocks than sort of sector-wide. A lot of gas stocks are reacting very, very sharply. Look at Gujarat Gas, GSPL, huge move. Adani Total Gas, 13% higher. A lot of these stocks got whipsawed. I mean, they've fallen as well dramatically. And then today is a day of a big pullback because Reliance is ensuring that KG-D6 gas comes to India. The government is ensuring that the priority sectors keep getting the gas that they need. And in any case, I mean, there is hope that this military option that the US is speaking of, that allows the Strait of Hormuz to open up again. And that hope trade is keeping stocks afloat. Mid-caps are really surging. Look at Happiest Minds, the companies that is sounding more optimistic about its prospects going forward, looking at better guidance. Happiest Minds is up another 12% after rallying in double digits yesterday. So that's what we have. Plenty of stocks moving around on the mid-cap screen. Okay, now it's time for our final segment on the show, and that's a segment with the Moneycontrol Pro. We have Moneycontrol Pro's Madhu Chanda joining in. Now, MC Pro has been doing a lot of analysis on the specific stock and sector level implications, the implication for the entire listed earnings universe if oil prices continue to hover around $100 a barrel. Madhu, good morning and welcome to the show, first of all.
Good morning. Good morning.
So, Madhu, I think we were just discussing this with our previous guest. There are too many moving parts and we don't know. But I think the market wants to believe that the Strait of Hormuz will open up. Whether it does or doesn't, we don't know. But I think that's what the market is indicating today. Crude oil prices have cooled off, close. Yeah, but it's not confirmed. I mean, the Americans are talking about it. But the ships have to really start sailing, right? In the interim, what have you made of everything that's happened and the implications for the Indian listed equity universe?
Well, as we all know, India is a kind of at the receiving end of this conflict, although not a part of this conflict. We are getting hit primarily on three counts. As we all know, it is one, because of the rise in crude oil prices. The second is because of the supply chain disruption. And the third is because of the currency. And this will feed into earnings eventually because, with rising crude oil prices, it impacts our current account. It leads to depreciation of the currency. It leads to inflationary pressure. And finally, the environment of monetary easing, stable interest rates will, give way to higher rates to fight the stagflation. So definitely it is going to have a far-reaching impact on different sectors and different companies, especially should it be a little more protracted than what was initially envisaged.
Okay. So, Madhu, a lot of back and forth has also happened over the last couple of days. First, a lot of the gas stocks got hit very badly because there was force majeure. Then the government came in saying there are priority sectors like, commercial LPG and household, of course, LPG, fertilizers, promising supplies to these sectors. What does all of this mean for some of the listed oil and gas players right now? I mean, as we understand things as they stand today.
See, what we are going through a stage where there is a firefighting every day. So, this reactions that you just spoke about, some of the gas stocks reacting to, government saying something, RILs saying that they will pump more from KGD6, government making some arrangement. These are all very short-term measures. For the real kind of stability to come, the war has to end, Hormuz has to open up. So coming to the other, so as this is as far as the gas stocks are concerned. Definitely, there is a cloud of uncertainty which still persists despite all the emergency measures that we have just discussed. As far as oil stocks are concerned, theoretically upstream should gain when oil prices are shooting up because there is asset repricing for them, and refining margins are also high, so that should be good for pure play refiners. But we have seen in the case of past conflict, whenever there is kind of a windfall, kind of a gain for the upstream and the refiners, the government generally imposes windfall tax kind of a thing, because that is necessary, because on the other hand there is a huge loss which the downstream companies are bearing. So to that extent, in fact, for a strong investment case, upstream companies really should be avoided, because it's not a given that they're going to reap the benefit altogether. Coming to downstream, as we all know, they are extremely levered to the marketing margin, which contracts when crude prices go up, but the retail prices are not rising because of inflationary concern. So definitely they are at the receiving end. So on the whole, oil and gas doesn't look to be an exciting space in this troubled times.
Yeah, absolutely. There's too many moving parts right now. Madhu, the other concern that starts building up, and this whole war has come at such a bad time, because we were talking about finally the Indians' earnings cycle picking up, right? After the
Absolutely.
third quarter. But now with oil being where it is, at least it's not at 100 today as you and I speak this morning. But if it ranges around this 90 to 100 handle, then what are the implications? I mean, are we in for a disappointment again on the corporate earnings cycle?
See, we are focusing too much on oil. That is definitely one very big part, and energy security is very important, especially for a country like India, where 85% of our crude is imported and close to 46-47% coming from the Gulf region. That's very important. But unless the war ends, even if there is, oil release from this strategic reserves, etc., we are not going to be addressing some of the other issues, which are like the supply chain disruption, which is happening on the sea route or the air route, and also the issue of, so many Indians working in the Gulf. Their remittances form a big chunk of remittance inflow into India and a driver of consumption. So all these issues are still going to be there. So the analysis has to be extremely layered. Till the war ends, there is going to be earnings impact. Maybe it will be extremely heightened if crude stays elevated, but it will still be there, even if crude, say, falls to $90 or $85, but because the other issues are still not addressed yet.
Okay. So, Madhu, I mean, going by your analysis and what the team is saying, any immediate implications for either GDP, earnings, of course, we've discussed. The rupee is also weakening, so obviously the current account will also have to be watched.
Yeah, I mean, see, we have done this analysis principally for the Nifty for the time being. And what we feel is if this, and so we have basically done a scenario analysis of a base case and a bear case. So the base case is a scenario when diplomacy wins, basically. This war is short but very painful, as we know, but it ends in a matter of weeks. In that case, maybe there will be some spillover effect in the first quarter of Q1 FY27 earnings, but overall FY27 earnings kind of broadly holds. Well, that's the a very optimistic scenario that we are talking about. Given the various moving parts and various actors involved, it is not just 2-3 countries. It's like a whole lot of countries are involved, and the geopolitics is too complex at this point in time. So, I mean, as it looks like now, the war is getting protracted. And if it is going beyond, say, a month or two, in which case, India also runs out of its reserves, and we are forced to take this difficult decision of having to revise fuel prices, that will feed into inflation, and RBI will have very little choice but to go for monetary tightening at that stage. That will have a meaningful impact on the GDP, on earnings, and the whole outlook for the market going forward. So it all depends on the duration of the conflict, which is honestly very difficult to predict at this stage.
Sure. No, absolutely. No one has those answers. Maybe not even President Trump. Let's see when he feels like it's time to call it a day with respect to this war, and we are all waiting and watching up until then. Madhu, thank you very much for the analysis, and I must urge all the viewers to go out there, get on Moneycontrol Pro, because you'll find lots of such nuggets of information, analysis, specific stock calls and advice as well. So very, very useful data and analysis on Moneycontrol Pro. Make sure you get on the platform. Madhu, thank you so much for being with us. You have a good day, and we'll look forward to having these conversations again soon. Thank you. Okay, well, with that, it's 10 o'clock. It's time for us to say goodbye on this edition of Opening Bell, leaving the market down about 0.5% on the Nifty. Mid-cap index is very quiet. The Bank Nifty is sliding. The Indian market is still surrounded by overall worries with respect to the direction of this war, geopolitics, risk-off, technical factors. Individual stocks are doing much, much better. So as of now, this is a day for individual stock action. Speaking of which, we will leave you with today's key brokerage commentary. A couple of the notes which call out interesting stocks. Take a look, and thank you very much for watching.